So far, the stock market is hanging tough. The S&P and the NASDAQ, both reaching record highs on Thursday. Let's send it over to Michele Schneider of MarketGauge. Mish, the stock market is shaking off the government shutdown, but not gold. As a safe haven play, gold reached a new record this week. Is this due to inflation fears?
And people keep calling for tops and it keeps going up. And there's plenty of reasons for that. So here we are, 3,900. But I think the trifecta of inflation is even more important. And although we've seen silver rise, the silver to gold ratio still hasn't flashed hyperinflation. So if that silver to gold ratio breaks down under 80, which means right now gold is more than 80 times the value of silver, if we start to see that flip, and silver really starts to go even more parabolic than it's gone, $50 and beyond, that's number one key to a potential hyperinflation scenario. The second, of course, would be the dollar. The dollar is weak, hasn't fallen apart, but if it does, that would be another factor. And the third factor are really two X factors, and that would be sugar prices, which we've talked about before on the show as a barometer of social unrest, but also oil. There's so much about the pressure of oil going down, all this oil and the glut of supply. But if we start to see oil reverse and go up, as we're seeing already in natural gas, I think you can pretty much bank on not a stagflation, but we go into a hyperinflation. And we know there's only one way to control inflation out of control, and that's much higher rates, which of course would possibly put us even into a recession and hyperinflation. Now, I'm not saying that's going to happen, but I will say that there are certainly signs, and gold being the mirror of it, that at least people should have it under their cap and keep an eye on that.
Thank you for your trader talk.
Thank you so much for having me.